Last week was quite amazing. I enjoyed myself, even if I was too busy, so I was not consistent. I would love to be on the chat, but then it was an amazing week for me. Uh, so let's see briefly what to expect from the DXY. Okay, so with respect to what we have here on the DXY, right? We cannot accurately say that the DXY is now bearish. Okay, because if this is our trend, let me make this bold. Okay, so if this is our trend on the DXY, okay, and this, then this, okay, it means this is the low before this high. Okay, so the only time we can indicate that we are bearish on the DXY is when we actually see this, okay, or a violation of this. So this should be the structural point we're interested in. However, price can pull back to this point and still decide to now give us some certain level of correction to the upside. Okay, so we cannot outrightly say that we are bearish yet or the dollar is bearish. However, the dollar is weak because we have failed to create. Now look at the whole price story before this time, okay? And this is the daily time frame. Price had easily moved to create highs and lows and highs and lows and highs and lows and highs, lows, highs, lows, highs. You understand that, right? So the momentum was quite bullish. Now we're at a point where the DXY is struggling to go higher. So we have this low that now failed to create a new high, and now better the new low that still failed to create a new high. But overall, we are still respecting the demand order flow. Okay, so demand order flow is still very much intact, even as the supply order flow stays intact. So we are tucked in between demand and supply on the daily time frame. Okay, so let's drop a bit to the 4-hour time frame. Okay, now we have this sort of equal highs resting at this level before this area. Okay, if this is an uptrending formation and the bulls are still very strong, this is external liquidity, so this should be cleared. But if that would not happen, then we have the liquidity target here. That is the demand, the actual base of the demand that could be tested before further move to the upside. So what we could see is that price could react back into the zones before dropping down to clearing this area and then giving us some push into this area, right? Then we can now see further move to the upside if the dollar would maintain strength. If the dollar would maintain strength. Now, don't forget we have fundamental reasons to believe that the dollar is weak and then could be going bearish. We could be experiencing a change in structure or a change in trend. That is why we are having this sort of weakness in pulling above this high. It's quite possible we'll be violating all of these and continuing bearish. But I am an intraday trader. I am not a position trader or a swing trader, but I'm not too concerned about the long term. I'm just concerned about what happens within my day-to-day time frame. Okay, so let's see the 1-hour time frame, then we'll see the 15 minutes. Now, a lot of people will be expecting this to force price upward, right? Which is possible, even if a very low probability. Okay, which is a very low probability, but then possible if we see reactions to engage. And we can have price work from this level as some sort of mitigation to mitigation back into these areas and then dump. Okay, or we can have price because personally, I do not regard structure as the way you call structure, right? I do not regard structure. I regard liquidity because I see structure as liquidity. What you call structure, your highs and lows and all of those are just how I see my behavior. Okay, so I'm expecting price. I'll be more comfortable should price come back to this level right? This other illustration aggressively takes out this area as external liquidity and comes back upward to grab internal liquidity from this area, the fair value gap inside of here. So we should take out this week or these zones as external. That gives us momentum to now come back here for internal. And then we can now hurriedly come down to this point again as external. So delivery from internal to external, right? From external rather to internal, back to external. Okay, let me go down to the 15 minutes time frame that I can get a clearer picture. And then these lows are lows from the from last week. Okay, these are last week lows. These are previous weekly lows, PDW, okay, or PWL rather. So this is a previous weekly low. And then we have liquidity resting below this area from people who we are long on the initial move and then had held all of this position down here. Some of them are break even already at the moment. Some of them still have open positions here. And then some smart money traders will be looking to buy from this point because of a grab on liquidity, yes, right, at this area, and then a break of structure. This should be their return to order block. And we are getting some sort of reach into the area, not a reaction, a reach into the area. Now let's see what price does with this reach. It is possible, even if low probability, to see price come up here first before this happens. Okay, it is also possible that we can clear this area aggressively and take this low out as liquidity from the previous week. The same way we have lows and highs and Asian highs and Asian lows as our points of liquidity. It's the same way we have previous daily high, previous daily low, previous weekly high, previous weekly low, previous monthly highs and lows as liquidity targets. Okay, so this is a pool of liquidity sitting here for me as far as I'm concerned. I will prefer to see price logically come back to this point. So grab this liquidity here as external, come back here, take internal, and then proceed to clear this external at the target liquidity of this low. Okay. So that's what I'm expecting to see on the DXY. Now let's marry this to what we have on Euro USD. Sorry. I had some markups I had done already on this. Okay, fine. This is all right. Let's look at it from the daily perspective. Okay. Now the daily is still bearish, but inside of the daily bearish leg, the 4-hour move is bullish. Okay, let's see the 4-hour time frame first. Don't forget, this is the daily high, still maintained, right? And then this is the daily low. Now, as far as this high stays intact, it means price is still bearish until we are able to clear this high. Okay, well, let me show you something quickly on the 4-hour time frame. Now, this is the 4-hour time frame. We have this low to this high, to this low to this high, to what? This low. And then this high failed to clear previous weekly low, previous weekly level of demand, right? This high failed to take out this area, which means that automatically this high is a weak high. Okay, the same way this high had failed earlier to take out this area, okay, which was the block, the area respected. This high failed to take out this low. Because of that, this high is the target liquidity or external liquidity to be taken, right? The same story is at play here with respect to your structure and trend. External liquidity comes into place to be taken, right? So we can have the same price delivery here happen with this top as our first point of previous weekly high. When we go down to 15 minutes, I'll go into clarity of that. So I'll take out this trend line from the structures and take out these two targets now. And let's just have what we can work with plainly. Okay, you see the whole story behind the lows and the highs already. All right, so let's go to the 15 minutes. Okay, nice. So what we can see is that we could take out this high with Asia as target liquidity, and then price comes in after grabbing external, price comes into any of these areas to grab internal, right? And then after grabbing internal, we can now see further move to the upside. So grab the next external liquidity, which is the daily high. So I'm first concerned about this area, okay, below these areas. Okay, this is a minor graph. So let me just make this a single zone. I'm concerned about these areas, right? And these areas. Okay, we can see price react from any of these and give us further moves to the upside. Okay, so until then, we're just looking for reactions. Asia will give us a clearer picture to what will happen, because if this high will be taken out, Asia should be able to take it out. Now, on the contrary, okay, or still in line with this view, if you look at this high that I am targeting as my external liquidity, my major external liquidity, okay, if we look at this high, we still have our Asian high sitting pretty from this area. True or true? Hello? Am I talking to somebody? Please, if you can hear me, indicate. If you can hear me, indicate.
I can hear you, sir.
All right, great. So we still have our Asian highs sitting pretty in this area, untouched. We still have Asian highs sitting pretty in this area, untouched. We still have Asian highs sitting pretty in this area, untouched. Okay, which is now some sort of liquidity pool that price could be interested in. Okay, so all of this liquidity from Asia should be tapped into or should be cleared. Okay, because let me see if we have some phantom around here we could work with. Let's see. Okay, so price took out the first ones, but then this is the target. Okay, so price should be able to come above and then clear all of this, but we must do that with the delivery of liquidity. Okay, so I'm expecting us to come here. This low is weak. Why is this low weak? Because why is this high weak? Because if this is the peak, at this area, right? If this is the peak, this is the low. Okay, and this peak had failed in its delivery to clear this low. You see that? This peak could not sponsor enough momentum to clear this low, which automatically makes the move this low to this high to this low to now bet a new high. That could now possibly bring us into our daily area, or 4-hour area rather, because 4-hour gives us a better detail of that area. Okay, to complete our 4-hour bullish leg, it could now bring us into this 4-hour region where we could now see some certain forms of reaction. Okay, so personally, if I get a nice reaction on this area on the 4-hour time frame, I'll be looking to hold it all the way down to this guy as target liquidity should the bearish move continue. Though I will take partials along the way, but I'll have a position that I expect to run from that top to this area to take out this guy. Should this guy hold? Because if this demand holds, then if this supply level holds, then the target will be this demand. If this supply holds, this demand is going out. You understand me?
Yes, sir.
Okay.
Yes.
Okay, so it's quite simple. The delivery expects to happen this week, and this week should be a very interesting week. Should be a very, very interesting week. So we'll be looking forward to seeing price. Personally, I'll be looking forward to seeing price as expectational order flow. Logically, price should be able to grab liquidity from this, deliver back into these areas, and then go back to target external liquidity, takes it back, and then mitigates this area of supply before we begin to see further declination. However, it is quite possible that we could be breaking out of a bearish run for EU. Okay, if we are breaking out of a bearish run for EU, it means that for some reasons, okay, it means that for some reasons, the dollar has to maintain its weakness. The only thing that would cause us to violate this bearish move is if the DXY would maintain that weakness. because they're going through inflation and then recession and all of that with the dollar. I don't want to go into many fundamental talks. Okay, because of all of the things that are happening with the dollar and with the economy, we could see a breakout totally of this move. Okay, but then I will only confirm that after this daily supply level has been taken. If this daily supply level is taken, then I will now look out for a price narrative that brings me back into the area to grab some sort of internal liquidity. Then I would now be with the buyers to take this up to wherever we can now expect price to begin some move to the downside again. We should take some series of moves. Okay, we should take some series of moves. Probably 4 to 5 minutes, if no more. Okay, so I'm not concerned about the large scale if that happens to play along, but until then, this is the story we have right before us on USD. So in the coming week on EU, I'm expecting to see in price to only two things. Okay, grab liquidity from this, come back to internal, and then continue back to external. Or respect this level of demand, which is going to be a mere reactive demand, not a demand I can swing from. Or respect this level of demand, give me a price play that will induce sellers to thinking they are still in charge, and then automatically drives them up with some fundamental or anything. Okay, and then continue its bullish momentum to the upside. But let's see how all of that goes. These are my expectations based on the logic with which I trade. And regardless of that, I am not married to this bias. Okay, that is why I can send an expectational order flow, and then the next minute you see my trades and I'm taking something else. And that is why you should not solely rely on signals of anybody or any expectation you've been sent. I'll always say it oftentimes, I will only teach you to see price like I see price. Okay, because as far as I'm concerned, this is the block inside of this area. As far as I'm concerned, this is the block inside of this area. And I see this as a failed area already. Okay, the breaking higher of this area, because if I zoom this in, let me see if I can do that in the 3 minutes time frame and get that particular area I'm concerned about. Nice. Okay, so logically, this is the last point of buy before a sell. This is the last point of buy before this huge drop to the downside. So it means that if this area has been mitigated, price basically does not have too much concern coming into all of this area to tap into this block. Okay, and then this gave us some sort of mitigation, but failed to complete the assignment. Failed to complete the assignment. So we could see price rally back into these areas, breach this, and then come back to this point. I may not even get to that peak where we expect, because we could now begin to work with this as some sort of breaker block. Okay, and then this becomes some sort of inducement as internal liquidity. Okay, these are just possible scenarios that could happen in price. And then we see this, if we get the reaction to short from here, then we could short from here, or long from here rather, to the upside. Okay, quite possible, very possible it could happen. Okay, but let's see the story that Asia presents and how Asia decides or intends to deliver its story. Then we can know where to use and what to use. But then it's important that you understand all the possible bits. That is why most times I am hardly trapped, because I am ready for a sell, I'm ready for a buy, I am ready for a counter trend, I'm ready for a flip zone, I'm ready for a breaker if it gives me the necessary reaction. Does that make sense? Okay, so we are open to whatever price wants to do for many of those areas. We are open to whatever price wants to do for many of those areas, because all of these are still liquidity that I expected to be taken out last week. Okay, I see all of these as built up on liquidity that could be taken out. However, price had not cleared them totally. So it's possible that we will be concerned about internal before going back to external, and then clear all this at a later date. Okay, because this could also be some sort of engineered liquidity for people who will be hoping to buy from here in the future based on the concept of smart money. Okay, so this could serve as inducements, and then why? Okay, because as far as I'm concerned, that zone has played, that zone has played its part already. Yeah, this zone played its part or her part already, so it's quite irrelevant. We could only come here to grab liquidity and then engineer some sort of extra liquidity and then take all of them out together. That's what I expect to happen from there as a smart money trap. Okay, so let's take questions, if any. I have another class in an hour. So questions from within the week, questions from wherever or whatsoever you're expecting. Questions.
Hello, sir. How you doing?
Very well, sir.
I have one question. When it comes to like, I'm not able to scalp right now. Stay on the computer for a long time, but
Okay.
I'm asking, if I will be intraday trading,
Yeah.
on what time frames will you be okay? I can understand that on the 4 hours you can look at the market trend, like when it is where it is trending and so.
Yeah. Is that your network or is it mine? Is that your network or mine? I can't hear you. If you can hear me. Sandra, can you hear me? Sandra, can you hear me?
Yes, I can.
Yeah, I
Okay.
can hear you now.
All right, then proceed. Yeah, you can go on. You can go on with your question. I didn't think you.
Yeah, like on what time frames will you be looking at, like your entries and your rings if you were intraday trading? I mean day trading,
If I was
not scalping.
if I was day trading, I'm not actually
Yeah,
scalping because people define scalping. I don't know your definition of scalping, but I'm not a scalp trader. I'm an intraday trader. Okay, because I don't scalp. I stay on the chart much longer than some day traders. Okay, so
yeah,
if I was day trading, I'll be looking at the 15 minutes. But with the knowledge I have on the intraday time frame, which is my 1 minute time frame, I do not even enjoy trading on the 15 minutes anymore because too many details will be missing. Okay, somebody sent this to me. Okay, somebody sent me this, right, on
yeah,
Friday, and was asking why price did not return to this area for a buy entry. Okay, now this is the 15 minutes time frame. Do we have price come back to this area on the 15 minutes time frame?
not at all.
All right, let's see the 1 minute time frame. Let's see the 1 minute time frame. Now, you see what happened here?
Yeah,
Now, delete the 15 minutes time frame. Now, do you see your 15 minutes entry was actually very useless? Quite useless, okay? Because price had already done the mitigation that it was interested in on the lower time frame, the 1 minute time frame. Okay, so if I was a day trader, so the person who messaged me was actually a day trader, okay? And then because he was waiting on his entries on the 15 minutes time frame, it did not occur to him that price had already delivered very, very pretty well on the 1 minute time frame. So let's say he was waiting for his entry at this breaker. He never got an entry for all of these moves to the buys. Okay, now let's look out for some way would have traded the sales. Okay, I traded the sales before the news, right? This is the area. These are the areas where I got my sales from before the news. Okay, so let's look together as traders, all of us here as friends and traders, right? Let's look. Is there a possible way I would have gotten an entry instead of this? How could I have entered the sales from here? Was it possible?
no, it won't be possible. You won't see.
I don't see anything. Okay, so let's go to the 1 minute time frame. Let's go to the 1 minute time frame. And then let's expand this a bit. Nice. Do you see a grab on liquidity?
Yeah,
A shift in structure?
exactly. Yeah,
And basic I route to you
and
back
then
to this area?
yeah.
Now,
Sure.
do you see that continue back after this shift in structure for a transfer
Yeah,
of fund, right? Let me take this back up. For a transfer of fund back to these areas?
yeah.
Great.
I mean, you will be getting a lot of free entries.
Great. So I had two entries at this area, and then I was able to hold down to the sales all the way down to this point as an intraday trader.
Exactly.
Okay. So the reason why I trade the 1 minute time frame is not because I want to be a scalper or because I enjoy the 1 minute. It's because there are details that are happening there as far as Euro USD is concerned that you may not see happen on the 15 minutes time frame.
Yeah.
Okay.
And a
So
lot of counter trends too.
exactly
Right?
a lot of counter trend trades. Okay. So
Yeah.
if you are too busy with work or you have something going, instead of totally neglecting the 1 minute time frame, pick a session. It could be London Open, it could be New York Open. Pick a session and trade the open of the session. Okay, where you know you can actually trade a session. Pick a session and then trade the open on the session. Because if I'm trading, okay, let's look at for the M15. Let's look at for where would have gotten possible entries. Okay, I sent this to the group, right? Based off the M15 time frame, right? But then as an M15 trader or a day trader, you would be looking for some sort of confirmation, right? When price did this, you'll expect price to now break that and then come back and then move.
Yeah.
Go through your chart to backtest and then let me know the last time you had a proper M15 confirmation entry on the chart when it comes to Euro USD. Okay, let's do a 3 days, let's do a 3-day backtest, right? Okay, so day one, 22nd October, we had grab on liquidity, right? And then, okay, we had this here as a shift ovation loop, right? 80% of smart money traders waiting for the extreme. Okay.
Yeah. It didn't never
and then 20% waiting for this. Now the 20% who would be entering on this, out of that 20%, 10% is waiting for some sort of confirmation.
Yeah, yeah.
Which will never happen. Which will never happen. Okay. So a new move happens here. Grab on liquidity, right? And then a shift in structure. Out of the 20%, 10% are inside of this move. The other 10% are waiting for another confirmation entry into these fair value gaps. M15 fair value gap. Did it ever happen? No, never happened.
Otherwise, it will be an aggressive entry.
Yeah. Okay. So
yeah,
it will be quite difficult for you to get those M15 entries you want to get on Euro USD. Now, I'll be doing a talk on the 26th of November. I'll share the link when it's time on pair mastery. Every pair has its distinctive, has its different character, its style. Okay, I treat every pair as a unique personality. The same way I see humans is the same way I see pairs. Okay, and then I see price action as the behavior, the expressive nature of a particular pair. That is my definition of price action. The expressive nature or the behavior of a particular pair. And when it comes to Euro USD, the main stories happen on the 1 minute time frame, believe me. Do I use the M15? Yes, I use the M15 because there are some zones I want to mark out and then I can't see them clearly because of the choppy nature on the M1 a few times. Okay, so I mark the zones out on the M15 and then look out for my reactions on the 1 minute time frame. So this is the best thing for you to do. While you mark out your M15 levels you're willing to trade from. Okay, let's come somewhere closer so I don't need to rush back and forth too much. Okay, so while you mark out an M15 level, where should I use? You're willing to trade from. And it's somewhere we had a mitigation. You see, it's even difficult for me to find a nice area where we had an M15 mitigation. Okay, it's quite difficult because all of these are liquidity graphs. I'm looking for something where I can get mitigation.
I mean, the 15-minute will be perfect to mark range,
zone,
right?
Exactly. Mark your ranges on your 15 minutes or mark your zones on your 15 minutes. Okay, so even if you're at work, set an alert on that zone you have marked out in your 15 minutes. Okay, so when price gets there, you are not sleeping on your screen. Okay, it triggers you on your smartwatch, on your iPhone, or whatever it is. You get back to charts and then see your 1 minute time frame and see the reaction of price around that area you have marked. Okay, so if price gets to that area and then rinses it totally. Or you delete the area and then shift your alert to your next target area. It's as simple as that. But the thing is that while you were shifting your alert to the next target area, some other trader who is active at the time is actually selling the correction that brings price to your next target area and making money off it.
Yeah.
Okay. So I would be sincere as I can. It is limiting for you if you are not on if you are not on chart during your session. A lot of moves you will not be able to take. Okay. So the best thing is that pick out a session. It's either you're free in London or you're free in New York, except you work extra hours.
Okay. I think I will be free after London, in the like mid of London.
Mid London.
New York. New York, I mean.
Okay, New York, mid New York, right? I think your time zone is now aligning with ours here in Nigeria, right? At the moment.
Yeah, we have the same.
Good. So you can be free from 2 o'clock in the afternoon, 2 p.m.
Okay. 16 or 4.
Yeah, 4 o'clock. All right, you could join in on London mid. Yeah, that's London mid. You could join in on mid London, mid New York, rather. You could join in on mid New York and then still get some good moves you could trade off in mid New York. You could get good news because if we what was the time here at 4 o'clock? Let's see, 4 o'clock. Okay, so this was 4 o'clock.
I mean, I started to backtest 3 days ago.
Okay.
And I was even forward testing, and I was seeing like the market is slow on that time.
Yeah.
It goes so slow.
Yeah. That's the only issue. It gets slow at that time because there's less volatility.
Yeah.
Less volatility, less activity. But then at 4 p.m., exactly 4 p.m. on Friday, we had this mitigation back to these areas, right?
Yeah.
Then after the clearing of all of these, and then I was in this cell. Okay, we cleared all of these and then we tapped right into these and then we began to drop. Okay, so if this was your 4 o'clock entry and you had gotten right in when you should, probably if you had the chart at this time, this was an amazing one to. Okay, so yes, 5 arrow done. So this was a nice 5 arrow trade. At least you could have something to eat or something to get out of the chart for the day. Okay,
yeah,
so
I mean that's enough for the day.
Yeah, that's enough for the day. 5 arrows is enough for the day. I was supposed to talk about trade management today, but I don't have too much time. Okay, I think this is just 9:30, 8:30 rather. So I think I have extra 30 minutes. I'll send a new link and then we'll talk about trade management. But then let me still take questions while I still have some time left in this one. Okay, so questions.
But thank you, bro. Thanks for the answer. It really helps.
All right, man.
My question is that I'm having issue with like when do you use breaker blocks and when do you use imbalance? Like one of the videos you said.
There is no when. I get your question you're trying to ask already, but it's one question smart money traders have that is a very wrong approach. You never know when a block will hold until it holds. Anybody that teaches you to say this is how to know that this time around price will use breaker, there are tips that gives us insight as to what to expect. For example, the law of momentum and distance. If price aggressively escapes an area, do not expect price to come to the origin. It would rather choose to react off the breaker before coming to the origin. Number two, the law of flip zones. If price grabs liquidity, breaks structure, but fails to respect the supply, gives some sort of reaction and then violates the supply, it will definitely come back to flip and not breaker before it moves. Okay, but then apart from these two, when it comes to the right order blocks to use, it is impossible to know that until price gives us a reaction. So the law of distance and momentum. If price aggressively escapes an area without proper grab on liquidity or showing any signs of bearishness. Look at the first instance, we had the grab of liquidity, shift in momentum, and then price got to the area of supply and tried to give us some kind of sell pressure, but failed and then moved. This last area pushed down before the off move becomes the new level of demand the price will tap into before buying. The next scenario is the law of distance and momentum. Price was in a sell pressure, okay, got to a point and aggressively escaped the area. If it's coming back, expect price to use the breaker and then continue its story to the upside. Okay, so you see the difference between the both of them, right?
Yes, bro.
You get the
There
difference.
was one, yeah, I get the difference. There was one video, one out of the library video. You were saying your liquidity is usually close to your imbalance, and you were making an exception of something like, how do we know that this is a flip zone, or when are we going to use the breakout flip zone? Or I don't understand that please very well.
That is what I
The
just
flip
explained.
zone.
That is what I just explained here. Okay, except you're talking about the concept of internal liquidity, what I call internal inducement. Okay, but that had
Yeah,
nothing to do with breaker blocks or flip zones. Those are like my 1 minute confirmation entries. I'll send a new link now so you can continue. I have less than 1 minute on this link, so I'll send a new link now so we'll continue.